Hey there, it's Krishna Perkins, and welcome to the monthly market report for January 2022. I know a lot of you are really happy to see 2021 in the rearview mirror as well as I am. And today we're going to hit on some neighborhoods and what they're looking at, what they had in appreciation last year to give us an idea of where we might be going into this new year. We're going to look at interest rates, touch on that. We're going to look at the appreciation. We're going to look at the acceleration and get some opinions about what is in store for us in 2022. So first up, the local neighborhoods here in Northeast San Antonio. What are we looking like? I've got every day a YouTube going out with just a 1 minute overview of each neighborhood. So for instance, we've got Eden here. I'm gonna show you this. Eden, El Dorado, Green Ridge. So Eden, they saw 19.4% increase in appreciation in 2021. El Dorado saw 28% appreciation. That was a lot of movement there. Green Ridge, 24.5% appreciation. Knoll Creek, 20% appreciation. So these are some huge numbers that these neighborhoods saw, and so that's what you're going to see in those 60-second YouTube bites. I'll leave a link on the blog. You can follow there. Otherwise, I'll just publish them periodically to the channel. So where does that leave us for 2022? We see what's been done. Every neighborhood's going to be a little bit different. So are the prices going to continue accelerating? That's probably one of the number one questions people have. And here in this graph, we see CoreLogic's FHFA and the S&P Case-Shiller. They're showing that we've kind of flattened out on the price acceleration. Thank goodness. Where can we go from here? There's a lot of things at play here. We're looking at interest rates. How high are they actually going to go up? Is there going to be any more inventory? Those all are going to play into what actually happens with price acceleration. And the buyers are there. We have the buyers. It's just a matter of how much inventory is going to come into the market to satisfy those buyers on a monthly basis and dictate what that price acceleration looks like. For right now, we're at least flattened out. We may taper down. This graph here does not mean that prices are coming down or that we're seeing any kind of decline, but rather the acceleration of the price increases. Okay, want to be very clear on that. It doesn't mean that we're coming down. So if you're on the sidelines waiting, that's not what this means. This just means maybe the prices aren't going up as fast. Okay, so what does the forecast look like? We want to skip right into the forecast because that's what everyone is looking for. These 7 expert opinions here come out to an average of about 5.2%. And to be honest, I'm thinking that for our market here in San Antonio, this is very conservative. And you'll see why as we continue with this market report, why that 5% looks very conservative. So Fannie Mae's at 7.4%, Freddie Mac 7%, CoreLogic 6%, Mortgage Bankers Association at 5%, HPES is at 5.1%, Zelman 3%, National Association of Realtors at 2.8%. That's on a national average. So I plug those averages in quite a few of these neighborhoods, and in some cases I bump it up because it looks like there's room to run in some of these neighborhoods compared to the other neighborhoods. And you may be asking also, what about the foreclosures you're hearing about? We keep hearing, oh, there's going to be a glut of foreclosures on the market, and that's going to bring prices way down. Forbearances is going to be our first indicator of the foreclosures. And right now, forbearances are finally hitting below 1 million. Okay, this is across the nation. Okay, for below 1 million. And the big deal about that is most of these people in forbearance have a lot of equity. They have tons of equity. We haven't seen this much equity in a long time, especially in delinquent mortgages. So the bottom line for them is that they have options. They don't have to sell. They don't have to give up the house to the bank. They can put the house up for sale. They can pocket some money. They can make other plans and move on with life. So don't count on just a glut of foreclosures coming into the market, saturating it, bringing prices down, and flipping the table on the home sellers. That's not what we're looking at right now. We don't want to see the market have to rely on that, obviously, because we don't want to see people getting their homes taken away from them to benefit others. We want to see them successfully sell their home and move on with their life in a dignified way. So moving on to mortgage rates. Okay, mortgage rates, they are moving up. We are seeing upward movement in mortgage rates a little sooner rather than we anticipated, particularly due to the government's desire to taper down some of their programs that they instituted because of the COVID-19 threat. And now because of inflation, we have to battle the inflation threat on the other end of it, and the answer is going to be to increase interest rates. And the markets are responding, particularly the housing market. So throughout the year, this is what the projected interest rates are, and this could change anytime, but we are expecting at least a couple of interest rate hikes throughout the year, and these are the best guesses from Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors on what that looks like. So take that in consideration to your plans. Number one, we've got price increases that are still going to happen. We have interest rates looking like they're going to be coming up, and they are starting to do that. So just keep that in mind as you're moving through the year. You might be asking, will rising mortgage rates slow the housing market? We're going to let Bill McBride, he's the founder of Calculated Risk, answer that for us. And he says point blank, it is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. We're going to get into inventory here at the end of this so that you can understand where he's coming from. And he's basically he's saying that the inventory is going to be the driving force, not whether we have the foreclosures are not going to be the driving force. But the inventory, because it's a supply and demand issue. We just don't have the inventory to help lower the prices across the board. It's just too many buyers in the market for the amount of inventory we have. So on a national level here, housing inventory is lower than it was last year. December of 2021, the year-over-year comparison to 2020, inventory is lower. So we're already way lower than we were on, this is a national average, 26.8% lower. That's nationally. Let's look at locally. Locally, my goodness, Bexar County is 43% lower. Okay, we are the destination city. Zillow announced that San Antonio is in the top, I believe it was number 4 spot for destination cities in 2022. So that that's an indicator there that we've got more to come in demand here in this local market. Inventory levels are going to continue to be an issue. So pricing is going to continue to be an issue, despite rising interest rates. So we'll just have to see how that plays out, at least in the first quarter or half of the year. I'm anticipating to see multiple offer situations and bidding wars continue into 2022. So prepare for that. Bottom line, if you're a buyer, don't let up, especially if you're already on the margin there, you're at your max, approval amount, or your interest rate is really starting to make you uncomfortable. You need to be on your toes looking for that deal to come through, and keep putting in offers, and stay diligent there. Sellers, you're still looking really good. If you have that tough to sell property, it needs lots of repairs, now's a great time to sell it. This is not going to last forever. I don't know what the answer is going to be. I don't think it's going to be the interest rates. I don't think it's going to be, jobs right now. But it's not going to last forever. It's going to change at some point. There will be some event, don't know what it is, but it will at some point change. So, if you're thinking about making a move in 2022, let's connect. Give me a call, 210-260-6617. We'll see how this plays into your scenario and what we can do to make you successful in 2022. Thanks, and I'll see you around.